AMD or GME, and I took AMD or GME, and AMD would have definitely hit that profit target and been out. So it's now to the point where this strategy is donezo for me. It's that first half hour, maybe 45 minutes, if that. So I can just actually go and delete these alerts now because I don't need them anymore. I just delete these every day, and then I just reset them every day. And then this one too. CRVO triggered, but then fell back. Okay. So this is one that we were watching. Again, it came from a swing trading system that I use, right? The buy price was at 10, obviously not a good swing trade. And then we're just watching the, trying to see if maybe we can get an interesting price to get back involved. So I'm looking at this price. So I'll set that again. And if we get back through that zone, that'll be a little trade that I take. So 775 and then like maybe 715 stop. Again, just looking for ideas for longer term potential trades, longer term swings to make throughout the day. Just to have something to set and forget is the best way I think to put it, right? All right, back looking at the market, and we are rejecting a little bit here. So we got to this pre-market resistance, not quite the pre-market high, but this pre-market resistance. We're pulling back just a little bit there. GM pulling back a little bit more. So, now down on that position, but then SLNO up on that position. So feels like it's probably going to be one of these things is going to work well and the other one's not. It will be a slight net positive on the two of them. And that will be it for the day. But just grinding. Again, I really think that we'll likely test this today. It'll be interesting to see what happens when that occurs. One thing that was interesting is just look at this sell-off that we've had in copper today. Copper just reduced like entirely there, where was looking for some kind of move there in copper, but we didn't actually end up getting push there at all. I was looking to see if this bounce, if you look at the daily chart, right, copper looks really nice, but putting that big topping tail yesterday and then selling down there in copper today. Sorry, that's fun.
All right, looks like some little pullback could happen here. We'll see if it breaks 567. Kind of a layer that I could see it pulling back to, but right now just kind of hanging in here. And doesn't look bad. At least you just got to watch those lows, right?
Yeah, we got a long way to go to get there. That's for sure. But yeah, everything is kind of bleeding just a little bit here. Even though the SPY is not doing too bad, that copper again, was just chatting about that, but that's 2.3% down in copper today. Copper is generally important and something I watch because it's you build things with it, right? So if it's going to do well, then you're going to look to. It indicates a strong economy or it indicates a weak economy, right? Is this the big thing that people look for in copper? So there's Bitcoin. So there's Bitcoin futures. They're bouncing a little bit less. So it's just showing us that this isn't necessarily a tech. Actually, if you look on the heat map, tech is down. Electronic tech and technology services down. But then we've got retail, we've got healthcare, durables. All these things are green. Finance is actually kind of mixed here. So yeah, more of a 1 hour performance. Yeah, so tech not doing well over the last little bit, but then we have a lot of these other sectors that are just doing a-okay. So it's definitely one of those, not a tech rally today, that's for sure.
Yeah, I don't expect it to be. I feel like that's the area where you're going to get the chop. And I think that's the area that a lot of focus keeps going to. If I just keep it simple for me, I'm watching financials, I'm watching industrials. Today, leading the action is defensive and communication services, and they've been hot. Communication services 2 days in a row. Like a stock that I thought would turn around, AT&T. Look at that thing. Thing's strong. People looking for dividends. That's the only reason why they go buy an AT&T. And look at the action that you're seeing there, right? That's a continued trend. Did not expect to see it, right? If anything, I was looking, will they turn this around with the market rallying? Would they go away from this, right? Like sell out of that? And well, no, I don't. To see more positioning in that, and so I don't know. This is interesting. Verizon pushing too. There's a big gap to fill, but it's going for that gap fill. It's a big one too. It's a big gap to come back and fill, but it's working for it.
Yeah, so is that an earnings? Looks like probably an earnings thing.
And then XLP doing pretty well there. Let's see, XLC communications coming back there.
Yeah, the thing with XLC that kind of muddies the water on that one is I think it's got Google and some other
Netflix,
Meta or something in it.
Yeah,
it's
it
got
has
some
Netflix,
weird...
Google, Meta. It's like yeah, this is why I tell you guys that I don't like those whole spiders. Like, right? Like everyone refers to those. I refer to them because that's the only thing people look at. Because unfortunately, people don't look at too many equally weighted ETFs anymore. I know that you take a look at a lot of times those,
I love them.
Michael, but there's a reason why. Because I'm trying to find where the strength is. I don't want you to kind of twist that strength to just some names, right? Because that's what ETFs have a tendency of doing. If I'm making one, I want to twist some of the negative, right? And be more positioned into these high flyers that I know will stay strong even in a bad market, right? And that's what I see a lot of the times where it's just it's like a fool you type of stock where, like you've mentioned about how certain stocks were doing well yesterday, but tech names were really the ones that were dragging. The big boys were dragging the indices down, right? Things like that are very important to catch.
I think, the biggest culprit of this, the worst of the worst, is XLY. Between Tesla and Amazon, it's like 50% of XLY is Tesla and Amazon. So it's like that's not really a consumer discretionary. You'd think consumer discretionary. You put some Apple in there, and I don't know, Harley Davidson, and they're in there, but just the weightings of them, it's just it's Tesla and it's Amazon. It's again, equal weight I think is a good way to do it, and then also just more frequent rebalancing as opposed to like annual rebalancing. Start to rebalance these things monthly, or hell, even do it weekly. Why not? It's commissions for the company that does this, the spider company, would be free, so it would only create a little bit of a drag. You could do it completely algorithmically, but I think that's the biggest culprit. Like if you remember during the GameStop craziness, right?
All right, my friend, I'm going to hop out right quick. I know that you'll be starting up your interview really quickly here too. So I'll be right back, guys. Like always, you guys enjoy the interview here by Michael. I'm going to let him take lead, and I'll be back. Like always, guys, have fun. I'll be.
Peace. All right, guys. So we are, let's just go quickly, do a summary of the market, and then we'll take a break, interview my buddy. Going to preach to you guys just like I do about systematic trading as opposed to just drawing lines and guessing and all that kind of stuff. So I think it'll be a lot of fun. Just to keep you up on the market, we had that massive undercut and rally in the SPY, trapped a lot of people into the short side. Now we're ripping to the long side. We're getting close to, again, the 2-day VWAP and pre-market high. Interesting area that a lot of traders may take a look at. But let's do this. Go full screen before we pull on stage. So another interview. We're trying to bring you guys traders of different styles and different mentalities, right? We've had AI developers on here. We had Anne-Marie, who's just a seasoned pro when it comes to the market. And now we're going to bring on my buddy Dave Mabe. So just a bit of I don't have anything written down, so just a bit of what I know about him to get started with. But former CTO of Trade Ideas. So if you ever use Trade Ideas, he's either to praise or to blame on a lot of the functions there, depending on where you go there. Uh, Most importantly, and the reason that I brought him on is so we do a podcast called Line Your Own Pockets. It's just the whole point is just to focus on the systematic side of trading. I know a lot of people here aren't going to be quants or algorithmic. A lot of you guys play, the lower float kind of crazy stuff, but I think Dave's got some. I think Dave does as well. So there'll be some interesting kind of lookaways there. But the idea is always to get a little bit more systematic with your trading, if you can. And again, that's what we're going to chat about a little bit here with Dave. So without further ado, I didn't even ask. I'm just throwing you on stage here. Hey, Dave, how's it going?
Hey, Michael, how you doing?
Doing well. It's funny because I'm introducing you guys, but I just talk to Dave every week, right? We do our podcast on Fridays, so we're usually just like this, chatting about something we have prepared, but in this case, we don't really. So why don't you just tell the folks a little bit? I gave you a little bit of an intro there, but tell the folks a little bit about yourself, and then we'll see where this convo goes.
Yeah, I've been a trader for 20 years now. I've been a systematic trader for 15 of those. I started trading early. I was sort of investing earlier than that, and my time frame just got shorter and shorter. And I've been day trading for that whole period. My back test or my trading sort of turned the corner when I started back testing and getting more systematic, like we talk about every week on the podcast, Michael. I just realized there's a huge difference between getting in a trade and not knowing how you're going to play it, like how you're going to exit. You're making decisions in the moment during the trading day. That's very emotional. Like people come to me and tell me about, hey, I've got all these emotions. How do I get it out of my trades, or how do I get it out of my trading to improve? I'm like, well, you don't really have a plan. Imagine the difference between not having a plan, like trying to figure out in the moment how you're going to exit a trade, versus having a plan to begin with. So there's no confusion about what you're going to do no matter what happens in the trade. That's like you're trading a script then. Like you're following a script. That's a completely different trading experience.
Yeah, and it's funny because one of the reasons I wanted to get you on here is because I've been systematic from the swing trading side of things for a while, but on this show we focus a lot on the short term time frame, right? So Trade the Pool's prop firm that gives traders capital for an intraday basis based off a lot of their trading. So a lot of the people here are pursuing that. They're trying to pass these challenges and get funded and to have a system go throughout. So I just wanted you to talk a little bit about your aha moments or processes when it comes to systematic trading, because I came into this and I always knew that, okay, this is what I do from the swing trading side of things. It's very systematic. It's very, I know what on Sunday night, all the trades that I could potentially take for next week, and I should do day trading the same way. But the kind of path to get here has been, a little rocky and trying to figure things out along the way. So, when you got into this, you mentioned that your time frames got shorter and shorter. What really just kind of turned the corner and said, okay, I need to let robots handle as much of this as I can. I'm not the one who can just sit there and get an idea and punch in the trade myself. What was that moment that you're like, okay, I'm getting a robot I'm outsourcing my trading. I'm going to be the idea guy.
Yeah. So the very first strategy I traded, I found online. It was a guy that was blogging about it. And I was like, that sounds pretty good. So I started trading that system. And I realized after trading it for a couple of years, and it was doing well, but there were some kind of arbitrary decisions he'd made about it. And I was like, well, why? Because I would ask him, all right, so why didn't you take trade XYZ today? And he's like, oh, well, the relative volume was below X, whatever it was, whatever the rule was. And like, well, how'd you come up with that rule? And he's like, well, it just feels right. Or it didn't say it in those words, but I could tell there was no scientific process around deciding if that rule was in there or not. So just over time, I realized, okay, I'm trading this system, but it could be way better. I could trade a lot more trades if I looked and sort of systematically figured out what the rules should be and maximize my total profit. I had, I wasn't running out of buying power very often, so I knew I had some room to take more trades. And I just set out to systematically figure out those rules. And the other thing I did was I created a program for myself to take the trades. When you do that, that opens up a whole new set of possibilities, because imagine I was trading like a 15-minute time frame. All of a sudden I could trade a 5-minute time frame or a 3-minute time frame and get a lot more trades because I had a system that was a program that was entering the trades for me. So all of a sudden my capacity got a lot greater and I could be more choosy about the trades I was taking. So yeah, it was just really whole new worlds of strategies opened up that I hadn't considered before, just because I couldn't click trade and take all the trades that I wanted to.
It's funny, I laugh a bit because when we were on air earlier, I said, "Oh, I ran out of buying power," and I said, "Well, Dave's going to say today," and I was like, "Dave's going to think that that was a good thing," because
Yeah.
that's one thing I know that you mentioned in your blog there. And just FYI, if you go to Dave Mabe's website there, I'm going to link something in chat in a second, but he has a kind of a free little course to take about systematic trading, and I went through it, and I think it's really worthwhile. Yeah, so the idea was that you looked at this guy and he was doing well, so he had some sort of system that he must have tested, probably the old school way, which is, you take a bunch of trades, you record your results, you see what's
Yeah.
doing better. But then you looked at that and you said, well, if I start getting into, if I back test this, or I get a little more scientific about how I'm picking this, well, then from there, instead of just leaning on this guy's experience, I can get a little bit crazier when it comes to nailing in which filters are working, which filters aren't. And then the other thing that you mentioned there that I think is really important is you want to up the amount of occurrences. Now, for the viewers, why is that so important to be able to trade as often as you physically can across a strategy when you get there?
Well, do people like money? I mean, if you could get, imagine if you found a really good system and it trades once a month, say.
hmm
And then let's say you find another system and it trades once an hour. Like, which one do you think has more capacity? Which one do you think is going to be more successful? Which one do you think you're going to be able to improve at a faster rate using? Like, it
Yeah.
doesn't make sense to me and I could see this when I first started trading. I could see this because I was following somebody that was uh he was he was swing trading. He was holding for sometimes 30 days or more. And I would take some of the trades, and it was actually a pretty profitable system. But I'd be looking at my watch and pretty much looking at the calendar. Like, gosh, it's
hmm
going to be years could go by before I really determine if this strategy has edge or not, and much less improving it. But compare that to taking many trades a day. You're going to get so many more at bats, and you're going to understand so much more about what works and what doesn't work. There's if you have a good system or a good process in place, you're journaling your trades, you're going back and look at the big winners, you're looking at the big losers, figuring out patterns. There's just no way you're not going to improve at a much faster rate.
Well, yeah, and to be honest, it's one of the reasons why I started here and I started down the day trading journey, not to replace the swing trading, but to find more additions to it. Because what you're talking about is that if you have a slight edge, say you're just remove commissions and slippage out of the thing, and you've developed a system that's right 60% of the time. right? When you're right, you make $100. When you're wrong, you lose $100. Well, why not do that as often as you can, right? Assuming you have the bankroll to withstand the loss. So from day trading and then into swing trading and then into investing. And this is where I know me and Dave have a little differences because he's only a degen day trader and I want to do a little bit of all of it. You're exploiting that edge more often. So if you, again, the way I look at it is if you develop multiple systems across multiple time frames, then you're just always exploiting an edge. You have that opportunity to be doing it. And then we can talk about different security types as well, right? You get equities, and maybe you get a prop firm for CFDs, which is what the parent company of Trade the Pool does with the fivers. You can develop these systems, but I think a lot of people hear that and they say, okay, this is how do I do it all, right? Things like mental fatigue and all of that. But I know what your answer is going to be, but then how does someone deal with that? Say, they're having a problem even emotionally doing a couple trades a day. And you're saying, well, do 10 times that. What's the answer there? What's the system?
Well, it's always good to have a reference to compare yourself against. So for discretionary traders, that's your trade journal. And when I say journal, I don't mean like a diary where you're keeping track of what you eat and how what's your personality type and what you ate that day. I mean a database of your trades. So you can go back and quickly see, all right, let me sort it by the most profitable trades and look at those. How can I create more of those? How can I capture more of those in my system? It's always good to have that reference, and a back test is the ultimate reference. There's only two ways to gain confidence in a system. One is to trade it routinely and you just gain experience over time. The second is to back test it. You can go back and see, simulate the strategy over a long period of time, and it's sort of a shortcut to that trading experience. And the real powerful way to do it is to have both of those. So, figure out or how do a back test for a strategy. You're going to learn a lot doing that, and then trade it as close as possible to the back test as you can. And every day run the back test and compare. How did I do compared to the back test? That's a really powerful thing to be able to reference. It's sort of like kind of like a barometer that you're comparing yourself against against every time. It's a really
Well,
powerful way to trade.
Well, and I love that, and I think that's a big key too, because a lot of people come in every day and they look at their P&L and they said, if I make money, it's a good day. If I lose money, it's a bad day, and that's a really bad barometer because if you're faithfully following a system and that system should have lost that day and you lost that day, you should look at that and say, okay, right, that's just a normal potential drawdown in my system. And then vice versa, right? If you made money and your system made money, then okay, that's the way it goes. So you're using your back test in your system to gauge whether or not the results are good or bad, as opposed to just using something arbitrary like did I make money or did I lose
Yeah.
money today? And I think that's just a huge way to do it. So um, at Trade the Pool, I know there's mainly discretionary traders. So let's ease them into it. Let's say, okay, we're lowering you into this world, and we did an episode on this, and I thought it was great about what are the first steps. So you're someone who's right now and you're fully discretionary. You're doing all the work and you're entering all the orders, and you've got the 17 monitors with a billion different charts on it, and you're squinting for try to find the setup on each of those charts. What would you say is kind of step one to that person to say, okay, take this step and this gets you, maybe 50 of the way there, 50% of the way there to be automated. And then, as your career goes on, you can start to work further down that road.
Yeah. So I'm actually working with a trader now who is going down that same path, and he made a very good first step into backtesting, and I'm helping him get to the next level. And the way he started was he would just come up with a theory, This is a pretty simple opening range breakout system.
Hmm.
And he would come up with theories about it. And then he would just go back, look at a chart, go back over 30 days and keep track of, okay, how would this entry thing that I came up with, how would that have worked yesterday? How would it work the day before? How would it have worked the day before? All the way back 30 days. And he kept track of it. And he would make slight iterations on that to try to improve it and sort of do the same thing. So it really is, it's, that's exactly what a back test is. It's,
Hmm.
he was just doing the back testing manually. And I think that's a great start because it gets you in the mindset of, okay, how can I make this better? You're really, back test is, it's a simulation to get you confidence to actually make the trades. Because over time you're going to know that your system has edge if you do this. Right? And you're not just trading randomly. So I'm helping him now take that and do a more systematic and more programmatic back test where he can get many years. So we've got 10 years of history to look at now, and really dive in to figure out, okay, what matters in the system? When should you be trading the system? When should you ignore it?
Well, and the beauty of what you said there is that now he also has that, if he was to start trading it or even paper trading it or whatever, he has that framework. It's only 30 days, but he already has that framework of, what was my P&L at the end of the day, and then what would the system of, he has that thing that he can go back and he can kind of compare himself to. And doing that, I think, makes such a huge deal. And then kind of the next step that I'll talk to the people about that I've been doing here is, automating the alerting of it, right? So that you don't have to watch the 8 million charts and get really, mentally and emotionally exhausted by the end of the day. And that's, I think, a big step too. So you have the idea, you have the setup, you've done some amount of testing, either with a back testing platform or manual, and then you've got to start trading them. So ideally, right, you get to a world where Dave's at, where I quoted this and I think it's right, that you don't ever manually kind of push the button to say buy here or sell here. And it's probably been many years before since you actually, that actually is a good question. When's the last time that you, not because you had to get involved because something broke, but you're like, I want to buy this stock and I'm going to hit a button to buy that stock at that time?
Yeah, I try not to do it, but there is a case where I do that, and that's when I'm seeing a pattern that I think could be a system, and I kind of want to sort of go through the motions, taking a trade with small size to sort of feel how it's going to work out.
Yeah.
And so I will do that, but always the goal is to do that temporarily to get a
Mhm.
feel for, okay, is this really going to work? Is this worth putting in the effort to go through a back test and figure out if it has edge compared to other things I'm working on. So I will do that in that case. But yeah, it's always okay. Once I get it to a point, I'm always going to be executing it programmatically.
Yeah, and that's what I've been telling people, and that's what they've been watching me as I go through this journey. It's coming up with an idea, right? Trading it for a little bit in with small size and in these trial accounts in which you can do, and then when you get to the point that something is working, your next thing should be, okay, how do I not have to be the one to do it, right? What can I do to eliminate that? So what I started with there is the first one is alerting, right? So the viewers here have seen me build a little Pine script system that says, it alerts when an entry is taken, and then it gives me the size that I should do for my proper risk management, and all of that is sorted. So I don't need to think about that. It says, okay, AMD has hit your price. You should buy it. You should buy 200 shares, because if you get stopped out, that's the risk you do. And I think that's a really good step one. And the reason for that too is something like PineScript. I don't know how to code it. I just went to Claude and said, "This is what I'm trying to do.
Yeah.
Can you do this for me so that I can get these alerts?" And then I spent a couple weeks just kind of going back and forth with them, doing it live, and then writing down feedback and going back to the AI. and doing that. So what do you think of that for
I
step
love
one of
that.
a trader?
I love that because it gets you in the mindset of, a lot of people believe they trade a system, but going through the process of creating an alert for it is really valuable because you may realize, oh, well, there's a little bit of fuzziness there
Mhm.
that I, I need to track down, and creating a rule and alert for it is going to help you with that fuzziness. So any sort of discretion or gut feel, creating an alert is going to like force you to come to grips with that and
Yeah.
make decisions that you may be making during the day now, but you don't realize it.
Yeah, because as soon as you're getting it into the code and you're getting it on paper, yeah, you'll know what it lacks, right? So for me,
Yeah.
it was a lot when it came to things like profit targets. I realized I was just taking profits where I kind of felt that here's the time to take profits, but now setting up second alerts to say, this is your profit target. Don't do anything until you get that alert. And again, this helps, and I think it's a good call it like a gateway drug to systematic trading, where there's a lot of people out there who get just really terrified about the idea of a robot taking control of actually entering the orders. And what I say to that is you'll get used to that in time. Just wait. But this is, I think, it's a good way to get you started to say, okay. And then I think what you'll do is you'll find uh, this is a story I always tell for when I was trading before. My wife was actually one of the ones that pushed me in the direction to trading a robot. Came into my office one day, I had my feet up on my desk, and she's like, "Well, what are you doing?" I'm like, "Well, you see that box there? It's got nothing in it." And I said, "When that box has something in it, I'm just gonna go over to my platform and push a couple buttons to take a trade," because I was just waiting for an alert window to just print something and then taking a trade. She's like, "Well, couldn't you just get a robot to do that?" And it was just one of those like duh moments, right? Like,
Yeah.
yeah, I probably could. So then I wouldn't need to I could be doing something else as opposed to I have to be sitting here intently watching that thing because I can't miss the fill. So yeah, alerts are always a step one. And
Yeah.
I feel like we're burning through little mini podcast episodes, but I'm gonna do a little boat face because we've got this question. And again, we have a whole big rigmarole about this, about what backtesting platform to use. So
Yeah.
I think more than that, I'll say mine, but I think more than that is, let's just do a quick list of the things that we talked about what you need to see from a backtesting platform. So for myself, I use Realtest. And I do that mainly because it's built on multi-system trading. So the idea from the ground up, it's designed as you're going to trade multiple systems, which I do. I will say the limitation to it is that it's end of day only data, so you can't do anything when it comes to scanning for intraday systems. But I know we'll go through. I've got a couple things that I really need from a back tester, and I know Dave has a couple things that he's added to that, and that's actually brought into my trading as well. But for me, it's I don't want ever a single stock or a single equity or single indexy test. That to me is kind of useless. And when that I'm talking about, trading view and TrendSpider and all these that have pretty decent back testing engines, but you can only do one security at a time.
Yeah.
Which I get. It's not the end of the world if you're only trying to trade a futures contract or something like that. But the downside, I really think, there is that um, you should, if your system works, it should work on a basket of securities, and you should be able to test that entire basket at once. Because, like we talked about earlier, you want to, when you have an edge, you want to exploit it as much as possible. So you're talking about an opening range break. If you had an opening range break strategy on the SP 500, well, then why not add, maybe a basket of the most liquid securities in there and test that thing across that instrument and see if it works, because then you may be able to take 10 trades a day instead of maybe one or two. So for me, that's the biggest thing is multi-strategy testing, and then also multi-security testing.
Yeah, I think those are very important. I like Realtest a lot. I use Broker, which is sort of like Realtest, but for intraday data. I need intraday data. Um, there's a the other thing I look for is it needs to be completely customizable. So um, I need to be able to look at the nitty gritty and the details of how it works and customize how it works. So that brings me to Am a Broker. The other one is Trade Ideas. It's the fastest on the market. The only problem is it's a 90-day backtest window. I use that for a lot of prototyping. So I'll look and see, okay, because I know it's fast. I know it's real easy to come up with a strategy, real easy to test it. So I'll use that as a prototyping tool and then figure out, okay, this has some edge over the 90 days. It's probably going to be worth the work to use Am a Broker to do a longer term back test that I can be more confident in.
Yeah, and I think the last thing that we mentioned, that again is something that you're building a product for, and something that really helped me out, is it's the ability to export whatever columns you want. And the reason for that we'll talk about in a little bit, but that's a good optimization feature where you'll go through and you'll say, okay, I'm gonna take these opening range breakouts, and then with all of those trades you can export things like the 200, the relationship to the 200-day moving average, or the relative volume on time of entry, or whatever metric that you think could potentially affect that strategy. And then from that, you get a report, and you can do things manually where you could go through and just say, okay, let me remove all of the trades from above the 200-day moving average, and let's see what happens. But Dave's actually working on something pretty cool that I think the premise behind could actually help users as well, and that has to do with some fancy machine learning optimization. So why don't you talk a little bit about that, and also more broadly about the idea of optimizing strategies?
Yeah, so I do have what I think is a unique process for backtesting. I go over that. I go over all the details in the email course, which is free on davemabe.com. It's a 6-day course that walks you through exactly which backtester you should use, and here are the reasons why, and here's why you may want to use one over the other.
Mm-hmm.
A big part of my process is like an opening range breakout you mentioned. First thing I do is create a backtest that has literally no filtering. So every opening range breakout. And I use that as a starting point. Now I know I'm not going to trade all those, but I start with a backtest of that. And then I figure out, okay, under what circumstances should I be taking these opening range breakouts? So I whittle that down. So maybe it's, 10 or 20% of the original set that I know has a strong edge compared to the remainder of the set. And those are the ones I take, and then I ignore the others. I think a big part of trading is figuring out what not to ignore. Like
Mm-hmm.
your default should be, like, there's so much garbage out there, so much data. Your default should be to ignore everything and then
Yeah.
figure out what you're not going to ignore. I think a lot of traders do the opposite, where they're always looking for this data point and watching stuff all day long that could affect their system, when, like, you should take the opposite stance.
Yeah, and optimization gets really interesting, because what Dave's talking about there is his original system could have a couple 100,000 trades in it. It could be a whole lot of data. And with that data, you can start to ask a lot of really interesting questions like, okay, so I've got, a couple 100,000 trades in it. So if you have the right data points, then yeah, it's just asking questions at that point. You can go to the data and kind of speak to it like like an AI or something, and you can use a lot of AI for this, and machine learning and things like that, where you can say things like, what if, right? What if the gap is this amount of ATRs versus that amount of ATRs, or what happens if it's this amount of relative volume or that amount of relative volume. And then again, you get to the point where, like we talked about, there's a lot of people out there that are making a lot of trades kind of seemingly randomly, or they don't have a really defined edge that they can point at and say, here is all the data that supports the fact that I should hit the button right now and take this trade. And I think that's where a lot of people fall into a lot of trouble, because they're not in that kind of zone to say, yes, this is something that I the trying to say? I'm trying to say the kind of the emotional standpoint of I can take this trade knowing that regardless of what happens to this trade, I know that I've looked at 100,000 trades and I've filtered them down to maybe 10,000 trades,
Yeah.
and there is an edge there. So even if this one trade doesn't work, I no longer care. Because we were talking a little bit about the other day with other users who were saying things like, "Oh, I'm really frustrated because I missed this trade, or I'm really frustrated because I did this thing." And when you're looking at numbers in the hundreds of thousands of trades, that one trade, all of a sudden, it affects you way less than it did before.
Yeah, and it doesn't have to be 100,000 trades. Just by knowing, just by having that reference, like when you're in a drawdown,
Mhm.
question is, okay, is this normal or not? You can go back and say, okay, yeah, it is normal. I can continue to trade knowing that, okay, in the long run, I know I'm doing the right thing.
Yeah.
So any, it reduces the importance of any specific trade or specific day even.
Yeah, it definitely helps with the emotional side of things. So guys, I hope you like this chat. I hope I'm slowly converting the audience here into becoming systematic nerds, and coming up with ideas to start testing, coming up with ways to, at the very least start setting alerts, if not setting out, advanced order types and stuff, which we didn't have time to get to, but that's a whole other chat. But if you want to hear more about this kind of trading, again, the two places I'd definitely check out is the name of the podcast called Line Your Own Pockets. It's me and Dave once a week, just going through this entire thing. We probably went through, what would you say, each of those topics was probably a podcast or two in and of itself. So really
Definitely.
diving deep on a lot of those podcasts. And again, davemabe.com for access to that course and some other cool stuff that he's bringing. So listen, Dave, I know it's good to have you on here, even though we're just gonna tomorrow at the same time be talking about the same stuff. But I'm glad I could show you my people, and I'm glad my people could see that I'm not alone in the world ranting about how trading should be more systematic and less us caring about what GDP did to the market this morning.
Yeah. Yeah. Well, thanks for having me on. I really appreciate it. I've been looking forward to this. So yeah, I'm glad it worked out.
Awesome. Well, thanks a lot, Dave. I'll go back and just summarize the people of the market. And again, go check out davemabe.com for all that stuff, and I'll chat soon.
All right. Thanks very much. Bye, everybody.
All right. Now we're wrapping up here, but let's just do one quick look over on the overall market and just take a look at what happened here. Oh, I didn't know I could do that. Oh, geez, you don't need to see me that big. Why don't we do this more? You can see the chart. But the beauty of the time that we do these these is nothing's really happened here too much in the market. So you can see we blew right through the 2-day VWAP and the pre-market high right there, just knocked right through it. So another one looks eerily similar to yesterday, where we broke that zone right there and then we crashed all the way back down. Now we broke the pre-market low and then we rallied all the way back up. So looking at the daily chart, if we closed like this is a pretty interesting pattern where we came down, we touched that AVU up from the low right to the tick, and then we just rallied her right up. So very interesting look, very good look there on the market. So we need to see basically this zone hold. So for what I'm going to be watching when I check in on the market after some nice food, walking the dog, is, are we holding above this zone? If we're holding above this zone, then yeah, I think we're probably in for a little bit of a trend day. If we're back below this zone, then it might just be consolidation. If we're back below VWAP, then again, we got to watch the lows for that potential reversal. So, I appreciate everyone come by. I hope you liked that interview. Again, Dave's a close friend of mine and someone we talk a lot about this kind of systematic trading with. So, again, if you're interested in more of that, I'm going to be talking about it here. We're going to be talking about it there. And you can definitely come along with my journey as I try to take everything we talked about there from a systematic point of view from my swing trading world and then put it into the day trading world as well. So thanks everyone for coming by. We will talk to you all on Monday.
We are awaiting the Q4 final GDP print set to come through here. We're also getting initial jobless claims data just out, 224,000 versus 225,000 expected there on the week over week number, 1.85 million versus 1.89 million. There's that GDP print, 2.4% versus 2.3 expected. So a little better than expected to the upside for the final Q4 GDP print for last year. Again, 2.4%, 2.3 was the consensus there. Corporate profits quarter over quarter, 5.9%. GDP price index as well. Downside 2.3% versus 2.4%. So the economy still hanging out, doing things that are showing strength. Market not really reacting to that, however, at the moment. We are downside ever so slightly to start things off this morning. Tariffs, tariffs, and more tariffs. Everybody gets tariffs.
Oh boy.
Again. That's the theme for today.
I was watching the premier of this province yesterday give a news conference, and it looked like he had just seen a ghost, Brendo. So terrified was he of the implications on our economy. So much of the manufacturing on this side of the border is actually engaged in the auto industry. So we'll have to see how that all works out. But 25% is not a small amount, Brendo. Keeping an eye on Ford, GM, yeah. Tesla as well. Tesla looking like it's going to suffer a lot less because of only about 20-30% of their components come from Mexico. Everything else American related. So we'll keep an eye.
I'm sure they'll have to figure that out for Tesla specifically. But yeah, no, I chuckle because, yeah, what a back and forth kind of move this has been. After the close, we get the big flush on the announcement yesterday. And then here we are right back up again. 1050, 1040, 1050 coming into play here, about 0.5% for Ford. GM not as volatile at the moment, still kind of hanging out at the lows. You mentioned this one also, Tesla just kind of hanging out here. So we'll see how this develops. I'm sure there's more to come.
Oh, yeah.
As there typically is on a day-to-day basis, guys. But yeah, more tariffs to talk about today.
Yeah. Well, we knew this was coming.
I'm really surprised at the moves. I was telling you, like, I don't know. I thought it was coming. I mean, maybe it's early.
Thought it was coming. Well, what's surprising? There's a bunch of things that are surprising about this. One, the reaction you would have thought was at least a little bit baked in, like GM. I'm just gonna look at what like price.
Right, and Ford versus GM. That's the other thing.
Ford is up 0.5 and GM is down down 6 right now and holding the lows. But so you're getting a very different reaction. I was looking at BMW. In like the second the market, well, I'm not sitting here logged in when this opens up in Europe, but
You're not.
No, obviously not. But that actually caught a bit of a bid. So you'd like to think, okay, well that catches a bid. GM's not catching one. So I just sort of observed, hey, whatever, price action is price action. GM's relatively weak. Let's just go with that. It's not the only thing that's going to matter here today. And obviously, NVIDIA and the chips are back in play as they had a huge reversal. The market had a big reversal as well. So you came into big levels, and Palantir came to big levels. Day two, GameStop. Day two, GameStop should be in play after they dropped a 1.3 billion senior note offering, a convertible senior note offering yesterday in the aftermarket. So, looking for continuation short on that. Well, of course they're going to raise money. How are you going to buy Bitcoin?
No, I didn't even realize that. I wasn't even scanning for GameStop this morning. But now that
here we are.
Yeah, here it is right here. If we just look at this e-signal hot list right here, when I was just sort of scrolling down through it, I just saw GameStop right there. So I didn't see it. It's not updating the price there. So when I click on it, you see the chart right here of GME down to $26. So the hot list right now just showing the prices from yesterday. So I saw it on here and just thought it was day two earnings continuation. But yeah, NVIDIA today, you're going to see a nice little downside push as well, down into 112 off of 113 close. Tesla is going to be on the top of everybody's mind. Shout out to Chef Joe and everybody like that. Unfortunately, I'm still going to be looking short on Tesla. As long as we're under 280, I think it's going to be a short.
Excuse me.
There's some drilling going on right here. So I have some important announcements to make, and that is that downstairs we're getting two 240-watt charging stations for electric vehicles. And
so now you're going to get some?
Yeah, so now, well, we knew it was coming. I don't know. I want to get the Golf E, but it's not here. It's coming in Europe this year, so I don't know.
Well, that'll be
Chef
next
Joe says,
year.
"What the hell is that?" Yeah, so Chef Joe, so you'd like this as a Tesla owner. There, we have about 7 or 8 spots here downstairs, and it's a parking garage. And
I'm not even sure which one I was supposed to park in today, so I don't know.
And they're hammering. And so what we're running is electric from our breaker here in the server room. Hopefully we don't lose quotes or anything. And yeah, boom, show is over. So that was nice.
No, we'll be fine.
But yeah, so if we
There's
disconnect, stay with us. We know what's happening. But at the end of the day, yeah. So they're running wire and electricity down into the parking garage, and thankfully we're on the first floor, so just hopefully straight down there, and yeah, and then we can start charging up our gas-powered cars. So yeah, that should be fun.
Who has an EV?
Nobody. That's
Nobody here has an EV. Anyways, well, now it's the impetus to, but that's the kind of thing you need more of that to happen to get more people to convert, right? Because a lot of people haven't converted yet because their condo hasn't done it, or they're just
Here we go, Randy. We were just
or whatever it might be.
Randy, we were just talking about our situation there. We're hearing some drill. You can pick up the mic, please. I'd like to ask you some questions about what's happening in the background. So I came in today, and there was basically